Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Kicking into August. Got our tech man here, Mr. Dave White. We're going to be growling and prowling with you. Market-wise, let's take a look at it out here. We had the Dow down 55, NASDAQ flat, S&P's off 4.5, gold contract up $6 at $1,094 an ounce, silver $14.71, platinum flat at $9.84, light sweet crude got toasted, roasted, all of the above, down $1.66 at $46.86. Looks like oil, folks, going to go after the 42. You got an ABC structure down that says it wants to go to 35, so this is going to be wild watching this shake out. You absolutely had ExxonMobil taking B points out, ABC structure down, Chevron, large caps. Bottom line is that oil's in a tough position. Bonds, just the opposite. You had the 10-year go up 22 ticks, 127.17. That took a B point out with volume. The 10-year's going higher. Yield's running about 2 at, well, I'll get the exact yield for you right now. Yield today on the 10 is 2.1. We're going to be below. We're going to be below probably 2 next week, week after. It's pretty amazing. 30-year was up a full point and 7 ticks, 156.12. King dollar down 349 ticks at 97.34. The euro was up 49 at 109.82, and the yen down 22 at 123.93. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, what we have out here today, folks, is this. We have harmony in all the indices. And what I mean by that is harmony in all the indices and ETF structures is this. We got over the highs of yesterday. We closed underneath them. We had lighter volume. Those are potential ABC structures on the way down, with the C point being established today. The SPY is at 210.45. You did 95 million. You're going into 90 million. We went down with 117 million and 123 million. The NDX 100, we look at the 3 Qs. What we did with the 3 Qs, 3 Qs closed at a price point of 111.96. Had 20 million shares. That 20 million is going into 30. You know, the Qs are weak. Rejected price. We'll see how it trades back down into the lower swing point that was established on the 28th. The small caps, the IWM. What do we have with the IWM now? The IWM is the weakest indice. IWM, when you take a look at it, we're trading out at 122.91. This is a sweet little setup, man. You know, the highs in the IWM are 129. When even the S&Ps got into another high, this only made it to 126.74, where the high was 129. We did volume today of 29 million, which is going into 39. Gave it up on price. And this is the first indice that has a chance. It's already broken the consolidation that's been in for 6 months.
It looks like to me like you've already got the trend line setting up off the down that it just hit today, right?
It's beautiful, man.
Yeah, just
you know, we
spiked into it today.
Jack from Palm Beach called in the last hour, and he had the trend line pat, and it was perfect on the way down. And what you had, folks, you get a trend line on the way down, and you also have an amazing channel line coming right across, going all the way back to March 25th. Each and every time, I mean, the selling here is extraordinary. So there's a fund out here that's just unloading each and every time. In fact, every time, it's not even letting it get up as high as it did before.
Well,
you know,
during the day, I was posting a lot of quotes out there, but we've had so many of these IWM stocks report in the last 2 days.
Yeah,
hundreds of them.
Right.
And most of them are pretty much down. A handful of the bigger ones are up, but they haven't been doing well over the last 2 days in earnings.
No doubt. Gold. We take a look at the gold market. So what do we have with gold out here? First off, we get a Friday, and they couldn't take it out. They got gold down at 1,079, end up closing at 1,094. Bottom line, you know, I suspect we're going to go to 11:04 Monday or Tuesday. If we take 11:04 out, you get action, folks. 11:33 will be on the table in about 2 seconds. The biggest amount of information that was out here today, though, is the bond market. The bonds, if we take a look at this 10-year, what you're going to see is this. The 10-year took a B point out of an ABC structure on the way up. And what's so powerful about this, folks, is not that it took out an ABC structure on the way up. It's that it stopped right before the major swing. The major swing in this is 127.19. Oh, actually, it hit it perfectly. This is sick. So it's going to have all weekend to sleep, wake up in the morning, boom.
Except it only has till Sunday night. And then you've got Puerto Rico coming out. Is that going to do anything to this?
Yeah, it's going to send us to the moon.
You think that them defaulting will?
Oh, yeah.
Okay. Can you explain that a little bit?
Sure. Okay, so what's going to happen, folks, in fact, I think it's going to happen tonight. Let's see. Yeah, it's going to happen tonight.
The first.
The first is tomorrow. Yeah, it's due tomorrow. It's not due Monday. It's due tomorrow. So what's going to go on, folks, is that this is the first default, I think, since Orange County for state default. Well, actually, no, it's before that because that was a county default, not a state default. Yeah. So anyway, it's the first default inside the municipal bond market in like 20 or 30 years. I'll get you the exact number. If the bond market defaults, and this is where confusion takes place inside bonds. We're talking treasuries. Bonds, you have municipals, you have treasuries, you have corporates. Every time that you have a bad thing happen anywhere, treasuries go up.
Because they can't default.
No, because that's Uncle Sam. Okay?
Right. Yeah, they back them. Right.
Uncle Sam, okay, you're going to get your money. This is going to show you're not going to get your money off the state. Now, and I heard you talking about the liquidity in VOCA, okay? Yeah. And I suspect the way that and this is what's going on also. When you're asking someone about the liquidity inside the bond market, what you want to ask them is that what bonds we're talking about. Because there's no doubt there's zero liquidity, folks, inside high-yield bonds. I traded them. That's how I started, okay? And I was the bid and offer. And if I didn't want to buy your bonds, I wouldn't buy them. And you know what I used to do? I used to wait for Christmas time. I used to wait for the ends of the quarters because I knew people would take less money. Because I was dealing with corporate bonds. I was buying corporate bonds. I would give them a price. If they wouldn't take the price, I'd just put it in the file. At the end of the quarter, I'd call them up. Because there was no market. You know what? These were bankrupt airline bonds. And I was the only one that could figure out what to do with them at that time. So the liquidity will be in the treasuries, but the rest of the bond market, there'll be no bid. And that's where it's going to be a disaster.
Okay.
You know? But the bonds, I suspect next week, we're going to see a monster move in the bonds. The bond market is also telling us, folks, that the equity market wants to get down. Dave White, Tom O'Brien, you stay right there, folks. We're coming right back.